Mr. Chairman, thank you for your testimony. And I've listened to a lot of my colleagues today use words like threats, even lies, lying. The reality is, if a judge cautions an attorney that certain conduct would constitute contempt, it's not a threat, is it? That's telling the power of the court. It's laying out what the rules are. I can't see how people are jumping to the conclusion that by either yourself or the Secretary of Treasury informing a bank officer or a board that there were powers of the government to take action of a certain way which could constitute removal of the CEO or the board, that doesn't constitute a threat. That's informing them of what the powers are, isn't it?
As long as the reason for exerting that power is legitimate, i.e. that the manager took actions that prejudiced his own company.
And then that would be an issue that later on could be determined. But that's nevertheless, correct. It's not a threat. It's telling them the truth. This is what,
yes, sir.
These are the confines of the power we have, and we're willing to use it. I'm glad somebody told them that, if they did. I don't know they did, because I doubt whether they seriously did. I listened to Mr. Lewis both here and as a witness, and I interviewed him individually, and he's sort of rather happy with the acquisition that he made, and it accounted for 75% of its profits for the Bank of America in the last quarter. So I would suspect that about 6 months to a year from now, he's going to be touting this tremendous victory of his of acquiring Merrill Lynch. But all that being said, what we really, I don't know why we're spending our time to find out what happened between the 15th of September and January 1st. All we all know is a hell of a lot went over the dam, and particularly in that spectacular 2-week period after September 15th. I want you, one, before you leave here, to tell this committee and the American people what kind of jeopardy the American system and the world system was in. So we reiterate that moment, that we weren't all a bunch of relaxed, confident people walking around making clear judgments, but we were making emergency judgments, working 20 and 24 hours a day, and not with the clearest heads in the world. Is that correct?
Thank you, sir, for that opportunity. September was an incredibly intense period of financial crisis. Many of the largest firms in America came under very severe pressure. The failure of Lehman Brothers and the near failure of AIG were important reasons why the world economy went into a nosedive that lasted for the entire second half or fourth quarter of 2008 and the first quarter of 2009. The Treasury, the Federal Reserve, and other agencies worked overtime to try to prevent additional failures, additional crisis. Fortunately, the Congress provided the TARP funding in early October. In mid-October, there was an incipient global banking crisis that involved responses by policymakers around the world, the UK, Australia, Japan, Germany, and elsewhere. The United States was able to join in that effort because of the TARP money. We averted at that time a global financial meltdown, which in my opinion very likely would have created a depression-like environment in the United States, far more severe than the recession we've seen recently.
Great. Thank you very much, Mr. Chairman. And I gave you your shot. Now I'm going to come back at you. Okay?
Sure.
The thing we have to decide is what we're going to do in the future and how we're going to handle it. And one of the things in the last several months that I've been involved in investigations of everything from the Madoff case to other transactions in the market. But studying the inside of our regulatory authorities, I find that although they may have the authority, they may have the money to act, they sometimes don't know how to act or don't act properly. And as a result, they have all the authority in the world to prevent something from happening, but it happens anyway. And I want to say that charge would lie against the Federal Reserve. And that's where we're hung up in the course of a dilemma. The Federal Reserve, as I can see it, had several opportunities to prevent this economic crisis. One is the long-used 14 years of power to lay down the conditions on mortgage obligations in this country, that all the way through about 12 of those 14 years, the Federal Reserve failed to take any action until you came on the scene and finally did enact a set of standards across the board. If they had enacted earlier those standards, most of these toxic assets we talk about wouldn't be circulating around the world with the imprimatur that they're supported and passed on by the United States government. Two, there are issues with the Federal Reserve that they are now acquiring additional powers when they fail to use their power to address those two issues.
Certainly, and I agree with you that
The gentleman's time's expired, but please answer the question.
Congressman Kanjorski, you're right that the Federal Reserve was late to invoke those consumer protection powers. We have been very aggressive, as you know, for the past couple of years. I think it's very important, if the Fed retains those powers, that we strengthen the priority that those have in our decision-making, and that we have strengthened accountability, that we report frequently to Congress about what we're doing on these areas. So that's very important. In terms of additional powers, I think it's worthwhile pointing out that if we look, for example, at the Treasury's proposal to make the Fed the consolidated supervisor of systemically critical firms, that is not a major difference in terms of powers from what we currently have, which is being umbrella supervisor of all the financial holding companies. Rather, it would be not so much a change in powers, but a change in approach, whereby we would take a system-wide approach in how we would regulate those firms rather than looking at them bank by bank or firm by firm. So it's not a massive increase in powers. It's really a change in their